we're going to be talking about the next stage, which is seed. And with that, I'd like to just introduce our moderator for this panel, Devin Hunt, who is a designer, entrepreneur, and educator. He is a partner at Foundercentric, where he teaches entrepreneurship as a practical skill. He is also the co-founder of List, which is a fashion tech company based in London. He has founded multiple companies and only sunk a few of them, which is always admirable. He has raised venture capital both in the US and in Europe, which gives him great experience to you guys, and he's received accolades for his product designs. He even made Paul Graham laugh once. Please, welcome to stage. Devin.
You guys come up close. Hello, hello. Oops, is this on? Is that working? Yes, that's working. Hello, welcome. So this is going to be an excellent panel, basically about seed investment, what it is, how do you get it, what does it mean to have seed investment? And so in these questions and the stuff we're going to pose towards these fantastic investors, I'm going to try to play the role of the founder looking for it, and hopefully get some questions that you might not usually get to ask in the boardroom setting. So hopefully we can have some interesting answers come out of that. Now we have the live question system that we'll have up in play. So throughout the conversation we have, as things pop into your head, maybe like register an anonymous Twitter account so you can get them up there. But we'd love to have some questions appear on the slide do system. So without further ado, I'm going to ask our wonderful panelists to introduce themselves. Max.
Starting with me. Do I have a mic? Yeah. Hi, everyone. My name is Max. I've been involved in startups for the last 5-6 years. Founded what turned out to be the first online legal services company in the Netherlands. Then moved to Bulgaria, started being active in the region. The last year or so, I've done 4, hopefully soon 5, angel investments, and right now I'm getting close to launching a new fund for this region.
Thank you. Excellent. Can.
Hi, I'm Can. I'm from Turkey. In year 2003, I founded the first digital creative agency of the country, and 2 years later, I also co-founded a social network on TV series, Vertical. You know, we have in Turkey famous TV series. I guess you have some of them in Bulgaria as well. In 2008, I sold that company, and 2009, I sold my agency to Publicis Group, the French advertising network. I worked there as a general manager for a few years. And now I'm working as a mentor and a business angel, and we are in the stages of raising a fund. Thank you.
Afternoon, everyone. My name is David. I'm from Dublin in Ireland. I work with an Irish government agency called Enterprise Ireland, and we're really about helping Irish-controlled businesses scale from outside of Ireland. So we do a couple of things. We have a very extensive global network. We're very hands-on and practical around marketing and sales development for our client companies. We do an awful lot of work in giving them the management teams the skills to scale their business. And we're also a very active seed stage investor. So we've got a client portfolio of about 5,500 companies that we're working with. And last year we did about 190 seed stage investments.
Great.
Hi, I'm Lyuben, and I'm part of the Launch Hub team. We invest in startups in Bulgaria and the region. We are focused on a couple of verticals, among them entertainment and technology, education technology, and most recently Bitcoin. We have approximately 45 investments so far, a few of them performing really well. So that's about me.
Fantastic. So with that, you sort of entered into my first question, which is sort of the easy one, which is, as a founder, if I was coming towards you guys, I'd be interested in what sort of stuff you like to invest in. So what is your investment philosophy? What type of things do you like to look for in the environment? What type of founders do you like? And what sizes of investments do you like to make?
Okay, so for us, especially, it's the most important thing is to invest in companies which could leverage on the high density of engineering talent. That's why we are very active in the developers tools. So the most important thing is for us to have companies that could help each other and companies that could be part of a larger network and to work closely with other companies. That's why we try to focus on several verticals and not to be that much diverse.
So you look for a lot of synergy in your portfolio. You're looking for companies that can support each other when you come in?
Not only. This is one part of the equation, but the other thing is that we try to find companies that could leverage on the talent that we have on a close proximity.
Is that something similar in your guys' portfolios? Do you look for this sort of cooperation amongst your investments?
We're actually looking for startups that have a secret in terms of technology, design thinking, or you name it. And if that secret can be turned into a disruptive force in an attractive market, that's what we're basically looking for.
So that's interesting, the secret, because obviously a lot of what we're pitching today throughout the conference is this idea of iteration, changing, moving as fast as possible. Does this secret sort of exist in that kind of advice as well? Or are you looking for this sort of magic bean that you don't tell anyone about?
No, not at all. I mean, you can, in our opinion, you can really iterate secrets and make them sort of more impactful, I would say. But that secret actually is inherent to the team. I mean, it's like the team capability. It's not a secret written on a piece of paper. Don't get me wrong. It's like the team's capabilities, desires, know-how, you name it. I mean, the whole team makes that secret, actually, and it's not replicable.
So this enters into an interesting sidelong question, which is often you hear in very early stage investments, the team is a paramount part of whether that's a valuable or an invaluable investment. How do you vet that? Like, as a founder coming to you, what are you looking for in me? How can I prove to you that I have something fantastic there?
Well, you're looking for hustle, right? You want to see people that are very, very committed to do something. Usually something they don't even know, the way it will turn out. That's kind of the thing. And for me personally, the reason I'm not from Bulgaria or from this region originally, but what I like a lot here is that you have, you have untainted minds, right? You have a lot of opportunity to actually do stuff without being distracted either by what other people are doing or by other obstacles like high costs, difficulty to actually get your message across. So this is the reason this region is globally, and this is something that I don't know if a lot of people here realize it, but when you look abroad, the interest in Eastern Europe is I would say almost higher in places like Silicon Valley or other more developed geographies than it is than here, than the awareness here about how and how great it is to build startups here. So that's pretty much the reason I'm personally very interested in this region.
Cool.
I think for us, it's the ability to have teams that we know that we can work with, people who can listen and people who are open to change. You want someone who's driven with a vision, but you need someone who's actually able to listen to other people's experiences. Like, it's one of our biggest assets, the size of the portfolio. I mean, like, the amount of knowledge inside in that 5,500 companies is really impressive. And then there's also the fact that we've been working with these kinds of startups for the last 16 years. So we've seen people succeed and we've seen people fail. And if you go to a founder and you say, look, you're going down this path that somebody else has gone down, and I can introduce you to them. Look, come in and talk to these guys. And if they're willing to listen and they're willing to share their experiences peer-to-peer, and we step back, right, because I haven't done it, but I can introduce you to people who have. So that's paramount.
So this actually moves over to a very important question, I think, which is often, it's that sort of interview situation where you sit down at an interview for a job and they go, do you have any questions for me? I think one of the questions that most entrepreneurs ask is like, beyond the money, beyond that sort of simple fact, what are you going to do for my company? Because at the end of the day, I'm the guy in the office doing the work, spending those 8 hours a week, doing the hustling, flying the world, building a team. What else do you do to help me grow my vision beyond just, paying the bills?
What typically happens with us, we try to focus on the best performing companies, the people that are not only committed, but people that are showing that they can execute. So what we are doing, we are asking the right questions, hopefully. We are trying to provide some kind of advice because most of the partners, we have done it with our own hands. Because we are entrepreneurs, not only investors. And the third thing is, of course, we sit by the company, try to help them with building the network, make the intros, whatever.
So maybe something interesting that came out of that is often you see venture capitalist teams double down on the companies that are performing, and then obviously in the portfolio there are some companies that might be floundering or just moving very slowly, and maybe they don't get the same focus from the partners that they need to move them into the next bracket. Why does that happen? Like, do you guys want to chime in on that? Have you ever seen that happen in your own investments?
Well, so the thing is that you never actually know from the beginning whether something will work or not, right? So, you know, there's like this more enmous, I would say, way of calling it. They call it spray and pray. That's what actually most investors do in early stages. You simply do not know which investment will work out and which one won't. And you need that, you know, incubation period after you invested. So that's kind of the whole logic of investing small sums, relatively small sums of money into companies, is so you can see who is performing, who isn't performing, and then you basically, you know, it's the law of big numbers. So you put all your efforts in the ones that are the best, so you can help those ones forward. So that's kind of the reason you do it.
Any reply to that?
Actually, our investment thesis is that we are making our decision, and it's either right or wrong, and it's since the very beginning it's clear that we have made our decision, but we're not going to turn the potential winners into losers and vice versa. What we can do is help the potential winners win more and faster. So that's why we focus on the people that perform, people that are committed, and we believe that we can help them move faster.
Having sat on the other side of the table, and this is involved in my question, sometimes I wish my investor fed that information back to me sooner. It's like, oh yeah, we put you in the loser group, so just FYI, we're not going to send your emails anymore. Have you ever fed that kind of information back to one of your portfolio companies?
Well, yeah, I mean, it's in this you're supposed to be brutally honest.
Yes.
Because at the end of the day, I mean, it's also good for the startup, to be honest, because, you know, it's talent. It doesn't mean that this idea or this startup didn't work, that these guys are not good enough to come up with a really brilliant one. So it's always good for them to show them if it's not working, it's not working, and go find something else, or make a pivot, or make a really good iteration to make it happen. So I will say, yeah, the suggestion is like, especially team dynamics are very important. I don't see very well balanced teams, honestly. That's one of the major problems. Like, for a startup, there are 3 disciplines. We can categorize startup founders under 3 disciplines. Mm-hmm. It's like hacker, programmer, and, you know, hustler, sort of a guy who does the business deals and, you know, get investors and all that, and a designer. But ideally, startups are made of two people. Even 3 is sometimes a bit too much. So we tell, honestly, being brutally honestly, hey, you guys are not really complementing each other. You should really split up, because you are 2 hackers, you need a hustler, or you're 2 hustlers, whereas you're, you know, hacker. There's no point. Your sort of capabilities are overlapping, and this is one of the cases that if the sort of the seed has potential, this is some place that you're supposed to be honest with. And in my own experience, if you're more like a B2B company, or if you're a company that are supposed to generate revenue soon, it's a good one to have a 1 hacker and 1 hustler. It's more of a consumer-facing application, like Instagram. If your primary concern is not revenues firsthand, but user acquisition, then 1 hacker and 1 designer, or at least someone with a good design thinking, is quite essential, I would say.
Cool. Yeah.
Actually, I have a question for you, because we are pretty young funds, but you have 5,500 companies in your portfolio. Because we are not superheroes, and of course we make wrong decisions, but does it happen with you that you have a company which is kind of in the losers list, and it turns out to pick up and prove you wrong?
So we're unusual as an investor because we're government funds, it's taxpayers' fund, it's not private, and the way we engage with our companies is determined by that.
Does the performance metric change, given that that fund's public? Because obviously you guys are looking for a return for your limited partners. Is
Yeah,
that a similar scenario?
our goals are very different. We're an irrational schizophrenic investor. And I can talk more about that in a minute, but just to answer the question. So, I mean, because of the way we're structured, what we do is we very clearly set out at the start what we can add value on. You know, so here's the networks, here's the training, here's the funding options that are available. But we give very founder-friendly funding terms. So we have no voting rights, we have no board seat. You know, so it's very much founder-driven. So we say, here's the carrot. And you know, it's almost self-determining then. The companies that are most hungry for what we can offer are coming to us. And then it's easy, you know, then it's self-selecting. So if they're going to come to us and they're going to ask for the things that they need and you know, really reach out to us, they're the ones that we're going to want to work with. But then you give them I suppose the commercial or the product milestones that they're going to have to hit, and then we'll keep on engaging with those companies.
Okay.
So
okay,
slightly different.
I want to jump to a audience question real quick, because I think it sort of fits in with this idea around the founding teams. So the question is, what are the biggest deal breakers you find in founders looking for investment? And like, what should they avoid as a team? So maybe talk to me a scenario. It'd be good to hear a story, maybe anonymous, of course. Like, where do you like, whoa, we're not investing in these guys, crazy.
Something that, you know, for me is the hardest thing to deal with is figuring out whether the founders have a sense of urgency. You know, my own experience dealing here with Eastern Europe is that it's really, really difficult to know, not even before you make an initial small investment, but even afterwards, whether the founders can actually execute, whether their ambition, their hunger to succeed will be strong enough to you know, not only to do the first steps correctly, so, you know, get to a minimum viable product, validate some product propositions, but to actually go and kill a market. So basically go and aggressively sell. You know, and coming from here, very often you're not the right person to go just to a developed market, let's say China or the United States, and be able to sell. So you need to find people. You know, in order to do that, you need to have this crazy, crazy hunger to succeed. And you know, if you ask me, I think it's also partly because of various cultural reasons that people don't have those qualities developed. It's really, really hard to figure out whether they will. You know, my own experience is that sometimes the least, you know, inconspicuous people, or the people you would least expect it from, would turn out into extremely hungry fighters. At some point, they would be triggered. And sometimes, and this unfortunately happens a lot as well, you see a startup that is performing very well in early stages, but when they're faced with the need to actually, you know, raise, you know, more money from serious investors, go to a market, find the right people to hire, they simply cannot perform. They start, you know, they balk. So that for me is always the big, you know, the big black hole when talking to founders.
Any other interesting scenarios where founders just came off
Well,
an uninvestable situation?
You know, founders are supposed to be persistent, but not narrow-minded, I would say. That's a very fine-tuned, very sort of fragile balance. We expect them to have a strong personality because this is a requirement for an entrepreneur. I mean, entrepreneurship is all about managing uncertainty or courage in the face of uncertainty, meaning, you know, validation is sometimes even very disappointing for some founders. I mean, people get upset once they don't get their product validated, or you validate your product, but then somebody else comes up and finds the product market fit faster than you, and then they got upset. Investors might upset you. You know, I mean, you have to have a really, really strong stance, I would say. It's not an easy thing. But at the same time, you have to have patience as well. I mean, some guys are really sort of hard and alpha looking and all that, but their sort of energy is like short-lived, I would say. You have to have a sustainable passion and patience. And in the interviews, what we do is we try to sort of challenge them and see how they react. If you challenge them, if you sort of put down your flags too easily, that means you won't really stand too long. If we challenge you and if you take it personally, far too personally, and overreact a bit aggressively, that's a signal like you might be a bit stubborn. But if you take the challenge, analyze it, and come up with sort of a reasonable, I mean, take the question, analyze it, and try to explain in a sort of persistent but sort of sound way, then that's very impressive, I would say.
Yeah. This is a very interesting dynamic that happens between investors and founding teams, in the sense that like the investors do somewhat take on a leadership role in the sense that they're now involved in the company and often put very difficult questions towards founders, and founders often see like they have to appease the board in some way to move forward the company. How do you avoid that in that sort of scenario where you're trying to put these challenging questions to them?
No, not at all. I mean, I think this is something that we all. I mean, I'm coming from the advertising business, and it's entirely different. Okay, you can sell an idea just for the purpose of selling it, but if you're doing a startup, I think both the investor and the founder should be very, very honest, very transparent, very clear, because this is the only way that you can go to get it forward, I would say. And that's about finding the right balance in that terms.
Right. Dave, did you have something to add to that?
I was just going to, you know, it'll answer the question there, but also the one about the sort of the biggest deal breakers. And I think like everyone is looking for, you know, an entrepreneur with passion, you know, but I think what's important is understanding what the emotional driver behind the passion is, because you can have somebody who is passionate about fixing a problem in a market, and their ideal is someone who understands the market dynamics and understands how to sell and understands what the customer's pain is. But if it's a founder who sees themselves as the customer as well, and they're fixing a pain point for themselves, you've got too much of an emotional connection there. And really they're just trying to make their life a little bit better, and they assume that everybody will want to, you know, that this little automated task that they fixed is going to work for everybody. And if you can understand that emotional connection as the investor, you can help them understand how the market can be developed. Mm-hmm. But if you don't get that's their primary driver, it can lead to huge problems down the road.
Absolutely, absolutely. Can I add something on your point? Because he really touched on a good point. It's like, what we see is like, there is this founders, which we put in the category like startup founder wannabes, I would say. It's just about founding a company. It's not about the product, or it's not about that passion that you find in developing that product. And if the investor sees that, it's like a deal breaker, because it's not founding a company is not about proving your ego or proving yourself. It's about, you know, finding a real world problem and trying to come up with a solution, and you have a passion about this solution. I absolutely agree with you.
So I want to address one of the audience's questions in a sort of a question I had for you directly as well. Is that venture capital as industry in general is in quite an interesting space, in the sense that the entire purpose that most investments are made is to generate a return. You're trying to build your portfolio into something very valuable. And yet in recent years, we're not looking at very good returns. We're looking at 1.2% on massive portfolios. So why are you doing this in the first place? Like, why are you putting this much money forward into ventures when you probably could stick it in London real estate and make ridiculous returns on it? Why?
Will I answer that first? Because as I said, we're the irrational one.
Yeah, you're the crazy guys. I want to hear where the crazy guys do it.
So, as I said, it's government money, it's Irish government money that we're investing, and our returns are economic development, and that's it. You know, so we are not looking to make return on our investment per se on the shares that we may or may not end up holding in the companies. I mean, it's nice, and we've had good exits. So we've had close on €5.5 billion worth of exits in the last 8 years, and that's wonderful. But really what we're looking to do is develop the Irish economy. And that translates into jobs in Ireland and export revenues. So it brings a very different focus to our activities.
Now, given your interesting position in the sense that you're using government money, have you ever used any of your own money in any investments?
Me?
Yeah, you.
No, I'm not allowed.
Oh, you're not allowed. Okay, makes sense. Guys, how about you? Seed investment, why?
You know, I probably speak here for both Can and myself and Lyuben. For me, I made my first money with a startup, with my own startup. So it's very much, you know, experiential knowledge. It's stuff you cannot learn in a book. It's stuff you cannot. It's not something you can actually do in any other way, in my opinion, than by having it done yourself. So basically, what you're trying to do is you see there is a growing, the market for technology products is growing exponentially. We all know, you know, software is eating the world. A lot of other corny quotes that you can come up with, that you hear a lot. And basically going to a geography where you have a lot of able people, a place where it's really, really cheap to actually start building a technology product, and in very good conditions, not only cheap but also very good, like here in Bulgaria and through the entire region here. You're basically trying to replicate that success. So you're trying to empower more people to not only do what you have done yourself, because, you know, my own success is pretty moderate, but to actually excel and go further in that direction, and help them with that knowledge, with those skills, with those insights that you cannot generally get anywhere else.
I might be stupid, but I'm short. I'm short on the markets, and I'm long on the creating business, creating real value. So, in my opinion, what we have, we have a dual goal with Launch Hub to develop the market and to have returns for our LP. But if you look at the best performing funds, you always see that there is a very small percentage of funds in a specific geography or specific sector that are overperforming. So we hope that we are going to be one of these top-notch funds in the region, and we are going to be able to leverage on the engineering talent and the opportunities that we have here in this region. And the last point, for me personally, as I have played it kind of big in Bulgaria, my exit was $50 million. I do believe that I could be a small part of a really large thing coming out of this region.
So there's a lot of giving back to the community built up in this sort of scenario. How do you think your investors feel about that, your own limited partners? Do you think they share similar values, or are you sort of being idealistic on the stage at the moment?
You know,
you guys are actually raising a new fund.
Yeah, I'm raising a new fund, so I'm very much into those conversations. Actually, I spend most of my time talking to people with money. You know, anyone who's willing to put in, if, you know, from individuals that are willing to put in 100K all the way to big organizations that are willing to put in millions. The biggest interest that I see from people is the region. So this is something, you know, that I mentioned briefly at the beginning. I always see that in developed markets, if you go to like financial capitals like London or New York, if you go to Silicon Valley, people are extremely aware that Eastern Europe can yield amazing technologists, and with some help, you can actually build great products out of this region. So the main interests come from there. Of course, secondarily, people look at your own track record, look at, you know, what you've been doing. So in the end of the day, and this is something, by the way, you know, in my own experience, very true also for startups that are fundraising. It's really about the people, right? So you have personal chemistry with someone, and that's why they put in money in you, whether it's personal money, whether it's money of their organization. That's the way it works. But LPs are interested in doers who have done something similar before and are trying to empower more people to do the same thing in their region, and the market as a whole. So the market not for making money, but the market for producing technology is very, very hot in Eastern Europe. And that's what people like.
So this actually leads into one of the top questions quite well, in the sense that you brought up the fact that this area of the world is producing fantastic technologists. And often a lot of the press you see as an entrepreneur, so coming from my standpoint, is I see the place to go to leverage that skill is the Valley, is New York City, is London, is Berlin. So we're looking at seed investments in those areas around $6.2 million for a seed investment. So how do you compete with that, or how do you convince people to be part of your portfolio rather than jumping board, going to the Valley, getting a house, and hoping that you raise money there?
Well, you know, the fund economics actually are very simple. So the reason our region is cool is because entry valuations are very low here. I don't remember the number exactly. There's some market research, but it's something where somewhere 8-9 times lower than the Valley. Whereas if you look at exit valuations, they're like 1 or 2 times, 2 or 3 times lower than in the Valley. So that is the reason, right? So you can. I mean, this question is very good. If you look, for instance, at YC graduates, of which you're very well aware, many of them are raising their first rounds right after graduation, which, you know, they call seed rounds, and which are very often like 5 or 6 million rounds. Whereas seed money here is, you know, is proportions lower. I think that's just naming. It's you know, markets are different, prices are way higher up there, so that's why the names are referred to different amounts.
Well, we actually want them to go to the States, particularly to the Valley. I mean, for startups, what we're looking at is like, are they really YC material or not? And we actually mentored one, and they entered in the last batch. And we're preparing 2 startups from Turkey for this batch, and this ends, the applications end this Tuesday. But it's not that easy for a Turkish company or a company from the region go directly to YC, because our ecosystem is kind of backward, and you can't really find the right people to sort of improve your product. I mean, if you're thinking about usability or, you know, design thinking, product management. These skills are just recently being developed in our region, I would say. It's not like the States. I mean, in the US, you probably have a friend, you invite him and you buy him a coffee, he can give you feedback about your product and all that stuff, and you have it by you already have that value. But here, it's not that easy to get that. This is where we help startups in terms of these sort of missing bits. We try to sort of fill those gaps in the ecosystem, and we want them to go, because once they go there, it's really frictionless up there. I mean, I don't know that much about the region, but especially in Turkey, I mean, startups really struggle sometimes to convince clients, to convince advertisers, to convince, you know, corporations, or the government is not, or the tax systems is not that sort of founder friendly. It's not that easy. But once they go, it's really frictionless up there. I mean, convincing investors is much more easy, getting funds, making better deals with investors. So we sort of motivate them to go.
So you mentioned that some companies aren't ready for being YC material, or never will be YC material given
Absolutely.
the portfolio.
But we are really pretty much inspired from the Israeli model, which they have is like a product and the head office in the valley, but the research and development still is in Israel. We have so many samples. Honestly, we think this is working quite well. So it's a model to benchmark. We're trying to sort of be inspired from this model.
So this leads into another audience question quite well around the idea of how do you guys work with the funds in the Valley and other companies in the Valley. So Dave, you obviously have 5,500 investments. It's a huge spread. Do you have strong connections? Do you look to help people grow into these different sectors? If they're better positioned to be in the Valley versus being positioned, say, in Beijing?
I suppose our main focus on companies coming into the US is through the market and business development side of things. So that's our primary focus. So we have 5 offices in North America, and those people are there to help companies sell and build partnerships. So, you know, second tier then is, introductions to investors, if that's what the company wants. And we actually run what we call a Silicon Valley boot camp program. So we bring the Valley to Dublin, and we put our companies through a really intensive, 5-6 week program about how to get Valley ready. The way we're working with the big funds outside of Ireland is slightly different. So when those funds are looking to do European investment funds, when they're looking to build a new fund, we actually go into those funds as an LP. So we're bringing companies like Polaris as a great example. So Polaris Ventures have Dogpatch Labs in Dublin, and they've done a number of investments over the last 18 months into Irish companies. So we went in as an LP, we get a partner on the ground, and we get access to their network. So we've done that with Polaris, we've done that with DFJ, Highland Capital. On the life sciences side, because we do all sectors, we work with Fountain, we work with Sophie Nova and Novartis. So it's more about bringing the world to Ireland, and then building bridges back into those markets where the investors are coming from, and that's working really well for us. And it's solving some of the gaps as well, because Europe is so difficult to raise your 5, 10, 20 million, but those funds have the pockets needed because they've got the bigger LPs and all that kind of stuff. So we've only been doing that for the last, say, 18 months, 2 years, but it's been really positive.
Lyuben, how about in Bulgaria? Have you seen similar sort of abilities to build these bridges, or are you leveraging that Valley money to help grow companies here?
How strong is your connection with big established Silicon Valley funds?
Yeah.
Not strong. But our concept is the following. First, we want to establish ourselves as the place where the entrepreneurs are coming and knocking on our door. Second is to be smart enough to select the right guys, and then to help them grow. The moment you have this put in place, it's much easier to go. If you have the company, the team, the product, it's much easier to go and raise there. We have a company that has raised from DFJ, for instance. I mean, it's not that unbelievable thing. So you have to have the team and the product, and then it's much easier to go there and raise.
Cool, so I've got the time sign, so I have a final question to you. Like, I'm sitting here, an entrepreneur, I have a room full of entrepreneurs with me. We usually pitch you guys, so I want you to pitch me. Why should I work with you? You're first, Max.
So what we do is we take the best performing startups in terms of traction and help them get to a next level in big markets, which is predominantly Silicon Valley in our case. So if you have traction, if it's a consumer app, anywhere around 100,000 downloads. If it's a business-to-business model, 20, 30 accounts worth of several $1,000s per month each. What we can do is we want to help you take the jump in a very correct way to a big market, help you with hiring salespeople, marketing people, and helping find other investors in a developed geography.
Okay, that's pretty good. Is that right? Yeah, maybe. How about you, Sean?
Well, I'm not so sure if it's applicable to the States, but I think for the region, what we do is we sort of help startups to productify their offering. We make their products global and sort of teach them the ways to hack the growth or improve the product, do the iterations and all that stuff. We sort of provide them with the right information, the missing information that they need. And I'm an ex-entrepreneur, so I know their sort of emotional ups and downs and all that stuff. I also quite good at growth hacking, and my partner is software as a service guy from the 1990s, from the States, and he knows that stuff very well. He knows his stuff very well too. So we actually provide know-how, transferable know-how. And in our opinion, it's quite valuable for the region.
Okay, great. Dave?
I have a question for you first.
Yeah?
How did you get your name on the bottles of water?
Yeah, does anyone notice that my name's on all your water bottles? That's amazing.
That's a growth hack right there. Who spoke? Oh, Devin. Yeah, he was cool. So yeah, two things. I'd say the first thing is look at our track record. Talk to our portfolio companies. So I'll plug my fellow countryman Connor Murphy from DataHug is speaking here on one of the panels, and he's also going to be pitching outside. So talk to him about how we helped him grow. And then the other part of it is, just in terms of like pitching Ireland, the smartest companies and people in the world are choosing Ireland to grow their multinational businesses. So if it's good enough for Google and LinkedIn and Dropbox and Squarespace, and I can keep on naming names.
It's where AWS Europe's based.
There you go.
There you go.
There's a reason that they're there. It's the talent, I suppose it's the geographic location, and it's the support from the government. So that's a good reason to be in Ireland.
Okay, good. Lyuben?
So we are founders, and we understand how the founders are, what are they working on. So if you're committed on your business, we're going to be committed on how we can help you. So if you want to have a peer, someone that is a team member, come and talk to us.
Excellent. Well, thank you very much for coming to give you the pitch to me. We'll get back to you by email. Don't call us, I'll call you. But anyway, thank you very much for our panel for giving us some fantastic information. Thanks, guys.
Thank you, guys. I thought it was very good.